This episode of Macro Mondays aired live at 12:30 p.m. BST on Monday, the 14th of October. Tune in Mondays at 12:30 p.m. UK time to watch Macro Mondays live.
Hello and welcome to another Macro Mondays. My name's James Brodie and I'm Head of Learning and Development here at Onyx Capital Group.
And I'm James Todd, Direct Trader here at Onyx, hoping to give you insight from our trading floor.
Today we'll also be joined by Matt Aspen, our Head of Recruitment, who has a particular fascination in the US elections. We'll be discussing the implications of Trump or Harris winning the election. We'll also look at key market risks and trends and focus on this weekend's weak Chinese data.
Yeah, we'll be looking at US inflation, how that's been falling, even if gradually, and we'll be paying particular attention to the oil markets over the past week and their volatility.
So we'll start with the data out over the weekend from China. Inflation data came in far worse than expected. The CPI came in at 0.4% year-on-year positive, but much lower than 0.7 expected. And PPI came in a disastrous negative, down 2.8% year-on-year. Far worse than expected. This is largely being demand-driven, so it's not good signs coming out of the economy. And also on Saturday, we had a government announcement regarding fiscal stimulus. The market was expecting new spending of 2 to 3 trillion yuan, and the market was actually largely let down. There was no news came out of this.
Yeah, I think what this speaks to, as we see Chinese demand being weak, the significance of this upon many markets, as we're going to be seeing in equities, as the lack of stimulus damaged in our next conversation, but particularly on the oil market, we're going to be I think a lot of people are quite worried that China, which is one of the main demand centers for oil and oil-related products, if the Chinese economy is faltering, you see limited upside on sort of things like Brent and on products, as there's less demand and less of a home for these products. So this really is significant data coming out of China, and it's not overall surprising, but it is worrying.
And we went into the weekend expecting significant new stimulus news and largely disappointed. I know Brent, the energy complex, opened lower this morning. And if you look at the chart, if you're watching the podcast, you can see we have the CSI 300 index. And you can see when the huge stimulus came out a couple of weeks ago, we had a huge rally, nearly over 30%. And this has largely been, half of this has been given back. And the market's in sort of no man's land. This would be impossible to trade from this level.
Yeah, absolutely. Huge amounts of volatility, and almost as sharp as it has risen, it has fallen. I don't think there is a particular reason to be as confident in the Chinese economy's growth as the initial uptick had implied. So yeah, it's no surprise that things have come off, but where it goes next exactly, it will be very interesting to see.
And interesting with the Chinese markets, 2 weeks ago, we had the largest international inflow of capital ever from hedge funds. Last week, we had the largest ever outflow of hedge funds. So the market really is a tough one to trade at the moment. And the market really needs more stimulus here to get more trajectory upwards.
Yeah.
And again, another key point is this is just the equity market, but the vast majority of personal wealth is in property.
Yeah, and we've been seeing over the previous weeks that the property market in China is in dire situation, isn't it? So
absolutely. And if we move on to US data, last week we had CPI coming out of the US, came in at 2.4% year on year. It fell from the previous month, but that was actually above consensus. Also, core is still at 3.3% year on year. The Fed minutes, they came out saying, with regard to the outlook for inflation, almost all participants indicated they had gained greater confidence that inflation was moving sustainably towards 2%. In fact, Goldman Sachs came out over the weekend and they say they expect PCE inflation data will show the Fed at its 2% target already. But we have seen the break-evens moving higher, particularly with the stronger payrolls and the oil price moving up. Break-evens now, inflation expectations from the market are at 4-month highs. So on the back of that, we are seeing the 2s, 10s curves starting to re-steepen.
Yeah, and I think, one of the reasons why we're so keen to have Matt on the show this week is because of the impact that, the reaching the inflation target will have upon not only monetary policy, but also fiscal policy of whichever government comes in next into the US. It's going to be an interesting time. But yeah, from a monetary policy perspective, if the Fed is at its 2% target, then we might be seeing less dramatic action than had been initially forecast.
Other news coming out from monetary policy and economic perspectives, the RBNZ cut by 50 basis points. This was largely expected. We said last week there were 41 basis points priced in. Why not price in the full 50? Because there's so much more price down the curve. The market's still pricing another 155 basis points of cuts in New Zealand over the next 12 months. Aussie Kiwi, that's been tearing higher off the back of that. But you can see, if you're watching again, if you can see the chart, the differential between the currency here and the interest rates implies that Aussie Kiwi should be trading up towards 114. So there's plenty of room for that to move higher. Highly correlated, of course, the currency against the interest rate differentials. In the US, the economy's been holding up. We see the Atlanta Fed still expect to see Q3 GDP close to 3%, but we're seeing more anecdotal evidence suggesting that the economy is weaker. The National Federation of Independent Businesses see uncertainty index surging higher to the highest levels since the index started in 1974. Also, last Friday, University of Michigan consumer sentiment came out. That came in lower than expected. But also there's concerns rising. Financial situation concerns have surged higher. And you can see from this chart here, it's correlated with the unemployment rate. Pretty highly correlated, but they too have dislocated now. And there's something we've been calling for a while, saying we expect unemployment to move higher. We've seen it in jobless claims. We're seeing it in the PMI data. But what we haven't seen it in yet is the government statistics with the monthly payrolls.
Yeah.
US bankruptcy filings are also rising to the highest levels in a decade. And coming into holiday spending season, holiday spending is now forecast to drop by 5% this year. So it's still a pretty gloomy outlook. But having said that, the US economy is resilient and still far stronger than Europe, as we've mentioned. The 2-year yields, well, they surged higher after the payrolls 2 weeks ago. They've come into resistance. You can see again clearly there's a key resistance line there. The markets are looking at 25 basis points cuts for the next few meetings. And really from here, how would you trade that? It's really a wait for it to break. Weaker data, of course, yields will move lower. The OIS will price more aggressive cuts. Any slight hint of inflation or strength of the economy, it will surge higher. It seems to be a bit of an inflection point, consolidating, waiting for the next move.
Absolutely. There's a lot of uncertainty on the horizon. So unless there's a breakout before, I think people will be more than happy to sort of sit on their hands a bit and follow.
Again, the uncertainty, we have the election on November 5th, and we also have the Middle East tensions weighing on the oil.
Yeah, continually, yeah.
Meanwhile, S&P makes all-time highs again. We've mentioned before, by looking at historical data, it's expensive, but that doesn't matter. It's trending higher. All that matters if you are trading it or investing is the price action. It's trading higher. As long as it's trading above 5,670, it's in an uptrend. And asset managers now have their largest position in over 10 years. So something we focus on here, the energy complex, is the commitment of traders positioning. And we see when that gets extremes, we get retracements quite aggressively. But in equity markets, the market likes to be long. It continues to trade higher.
Yeah, I think also for any listeners that weren't able to see the graph, this is a stark difference between the S&P versus the Chinese stock indexes. The Chinese stock indexes had a huge uptick at the point of this fiscal stimulus announced, but the S&P this is a trender. And whilst it doesn't necessarily have to keep going up, that's where the momentum has been. And when you hear positive noises when it comes to payrolls or inflation targets being met, there's no particular reason for this momentum to be broken. So yeah, I can see this one carrying on, even if we deem it to be expensive in inverted commas.
Yeah, the economy is ticking along. The central bank's cutting rates. It's almost a perfect scenario. Yeah. The only thing I think would derail it would be if we see a significant deterioration in economic data. On to France. The French credit rating has been cut to negative by Fitch on wider deficits. Euro-dollar continues to trend lower. We target 105 on that.
Yeah, I mean, this is particularly, this is a bad sign from one of the major European economies. French government's got a huge black hole in its fiscal policy. So this week it was announced that they'd unveiled a new budget for the next year that aims to deliver a 60.6 billion euro remedy for its public finances. And they're planning to roll out 300 billion euros worth of government bond sales as well. So these are worrying signs, and it's no surprise that one of these rating agencies, looks on it and thinks, all is not well over there.
Yeah, the government's on thin ice. If they're going to see more cuts, people like to strike in France.
Absolutely.
And this, from the Eurozone, the two biggest economies, France and Germany, will come into, seem to both be in significant trouble.
Yeah.
So Germany actually had some stronger than expected data. Maybe this is a sign of green shoots of recovery. Maybe it's an outlier. But August retail sales were up 1.6% rather than the 0.1% month-on-month expected.
Yeah, I think, the graph just being shown here is for the German power futures that we've been paying a bit of attention to. And whilst we have a generally negative view on that, we've seen a bit of an uptick on the forward-looking Cal 25 power futures, and I think retail sales improving. That it's no surprise that you might see a reason for optimism in a very sort of simplified version of things,
and a downbeat economy.
Absolutely. Yeah. But if you look at the nitty-gritty a bit more, I think there have been some interesting headlines coming out this week. The Lufthansa CEO has said that Germany is not a particularly welcoming environment for business and entrepreneurship. This is building upon Ryanair and Eurowings having pulled out some of their services to Germany due to high fees and problems with the environment for entrepreneurship there. And similarly, this week there's also been headlines by Porsche basically saying we're going to need tariffs. The Chinese EV market is going to ruin our domestic car sales. Now, we're going to be talking even more about tariffs very shortly when we're discussing the US. But having to introduce tariffs in order to make domestic products more competitive is never a good thing. It's never a sign that an economy is doing well. So I think specifically within the remit of German power futures, we've seen manufacturing look poor. We've seen demand generally being poor despite this positive retail sales. It does seem as though this might be a bit of a flash in the pan, and I would expect this downtrend to continue.
And it's pretty alarming when you look at the car industry, how quickly and dynamic China has created its car industry, and similarly how quickly regulation in Germany and Europe has constrained competition.
Absolutely. And yeah, I was just going to quickly talk about the oil market that, I think a lot of people are watching with eager anticipation at the moment. What we're seeing is obviously a huge amount of risk in oil-producing countries. With what's going on in the Middle East, there is a continual spike in the risk premiums. So we have seen oil rebound a fair bit from its sort of $69, $68.50 per barrel levels on Brent, and this is exceeded $80 per barrel recently, but it hasn't broken out particularly north of that. And actually, this morning it opened slightly lower. And I think one of the reasons for this is the wider macro economy. You are seeing the risk premiums increase because of problems in the Middle East, but the upside is very much limited because of demand from China and worries about that, because of an increase in supply of crude oil from Libya. So there is a limited amount of uptrending that this has been seen. But one of the things that is important to look at is how managed money has been repositioning. We saw record shorts being put on only a month or so ago, but now we're seeing net positioning for managed money flip long. So there is a bit of support, but I'm not convinced that without major headlines in the Middle East that we're going to be seeing a huge breakout north of that. So yeah, it seems a bit range bound at the moment, which is quite interesting given all of the uncertainty going on.
And looking at the chart that we just had, although volatility's picked up, it's still actually very low compared to historical perspective. For instance, when Russia invaded Ukraine, and you can see it's between a clear range here. The upper trend line is coming down just above 82. The lower trend line, horizontal trend line, is at 70.5. It's still within that range, and I think if that when that range breaks, then you're going to see a really aggressive move, whether it's to the upside on increased Middle East tensions or to the downside on economic concerns.
Yeah, it's hard to say. If it were to break out, I would guess it would break out higher based on headlines, but that would suit, a lot of managed money, etc. So maybe a lot of these hedge funds and people are starting to, look to headlines in that way. But from a fundamental perspective, I'm not sure that it should break out northwards and might actually come off. So yeah, it's a mixed picture.
It does need headlines to keep it going higher at this level. Looking at the OIS pricing over the next 12 months, really stand out here. New Zealand, 155 points of cuts. They hiked most aggressively. Now they're going to have to cut most aggressively. And Bank of England, 120 basis points of cuts priced over the next 12 months.
Yeah, so that 120 is compared to last week, I think we were seeing 110. So anticipating a greater cut from the Bank of England. It will be interesting to see how this plays out with, we've got the autumn budget coming up on, I believe, 30th of October. So a lot of the rumours there are on an increased level of intervention from the government on fiscal policy, and especially an increase in capital gains tax. There's been some rumours that the Labour Party have also been quick to dismiss, but we'll see what happens. There have been rumours of capital gains increasing to 39%. If we were to see that, any sort of benefit to demand in the economy that an increase in rate cuts would lead to, I think would be mitigated significantly by an increase in capital gains tax. So, I wonder if you have any views on that, James.
Yeah, also with that, absolutely, it's going to be restrictive to the economy. We're seeing buy-to-let owners starting to scramble to sell with concerns over this as well. And it would be interesting to see if we start to see an impact there on house prices, because that could really damage consumer sentiment.
Definitely.
So on to the US election. Donald Trump, well, some of his key policies include higher tariff barriers. He's looking at tariffs of 10% on international trade and up to 60% on Chinese trade. That will bring in revenues. It's been estimated that could raise revenues up to $500 billion. But of course, what you'll be doing then is subsidizing uncompetitive domestic industries. He's looking for the lowest corporate tax rate for decades. He's going to allow oil drillers to pump at full capacity. And one other point, he'll look at illegal immigrants, shipping them out. A border crackdown estimates this could knock up to 3% of GDP, which would be very significant. Kamala Harris, on the other hand, her policies advocate more social assistance. Democrats want to wade into markets from real estate to retail. More concerns here on the budget deficit. This would weigh on bonds and certainly as well on the US dollar. So if you look at the presidential elections, the betting from Polymarket at the moment has Donald Trump the clear leader. But let's hand over to Matt Aspen. Matt, you're fascinated by this. You were all over the UK elections and you were spot on with your analysis. What are you thinking here?
Yeah, you're right. It's absolutely fascinating what's happening. I think it's quite unusual that the betting odds are so wide from the polls. I think it's unusual that they are, they have got that disparity at the moment. I think possibly that speaks to how uncertain it is looking, how close potentially it's looking as well. Recent polls have shown, The Economist yesterday, for example, showing Harris is 3.4 points ahead of Trump, whereas betting odds, as you just showed on the graph, very, very different. Trump showing 53.2% chance of winning versus Harris's 45.8, according to the election betting odds tracker. So really, really interesting picture. And I think for context, only once since 1980 have the polls and the betting odds been wrong on the election, and actually that was 2016 when Trump won. And
the question I have here, then both said Trump wouldn't win and he did, but here you've got the polls saying Harris but the betting saying Trump.
Yeah.
With polls, aren't people saying more talking with sentiment, where with the betting odds people were betting with money? So isn't that a more favourable one to look at?
Perhaps. I think they are normally in line, which in my opinion suggests that it's so close that one's going either way. And I think we've still got a few weeks to go. I think we've got time for things to change. But I think, even though the polls and the betting odds were wrong back in 2016, in a way they were right. Hillary Clinton won the popular vote. Trump won purely on the electoral calculus. So, the electoral college vote. So I'll obviously come on to that in a moment, but really, really interesting.
I just wonder, whether when looking at the validity of polls versus betting odds, the criticism of polls is often, you have closet Republicans, or in the UK, closet conservatives, who will say to an interviewer that they are going to vote a certain way and don't actually do that. So that would be the flaw, presumably, with polls. But with betting odds are a function of demand ultimately, and it's important to look at who's actually putting money on this sort of thing in order to discern what forecasting power they have.
For sure. And I think betting odds, even if there was a bookie who was very pro-Trump or pro-Harris, it wouldn't be in their interest to, support. I think it's probably the fairest way that the betting odds as it stands, because as you rightly say, it's in no one's interest to kind of sway that. It's purely about who will win the bet there. But I think, really interesting. And I think on the slide, if you're watching, and you can see that now, fascinating in terms of the difference in demographics between voters. Traditionally, Black and Latino voters have always gone for Democrats. In the last few elections, when you look at Latino voters, for example, it's looking shaky for the Democrats, I have to say, and I think Harris is in a little bit of trouble. Really interestingly, women who are much more likely, if they're Hispanic, to vote for the Democrats. So only 31% of women would vote for Trump currently versus 45% of Hispanic men. So disparity there in terms of gender. And similarly, among Black voters, previously in 2016, 92% of Black voters went for the Democrat nominee, 90% in 2020, but it's currently only 78% of Black voters in the US are saying they will definitely vote Democrat. Obviously,
that's amazing how many were going for Democrat.
Yeah, for sure. But I think what's also amazing is that massive drop from both 2016 and 2020. There may well be some undecided voters there. That may well change before November 5th. But it's I think worrying for Harris if for example, states like Georgia, for example, Arizona, Georgia in particular, Democrats won at the last election. They think because of huge swathes of Black voters in and around the Atlanta area who really supported Joe Biden at the time. Is that going to remain the same? It really remains to be seen. And I think independent voters as well, i.e. those who are potentially aligned with neither party and have supported candidates from other parties previously, it was looking pretty good for Harris maybe 2-3 weeks ago, whereas at the moment it's varies a lot by state, and actually Trump, I think, has it among independent voters right now.
Quick question for you: if the Democrats' two main donors are Microsoft and Google, and they control nearly over 90% of search engines, will that have an impact, do you think, in the last month?
Quite possibly, but I do think I think it will be about the voter turnout in terms of the demographics there. Trump is relying on those older voters. The question is how many of them are still with us today versus 2020. Young voters did not turn out very well at the last election. Could they turn out for Harris? What some polls are saying perhaps they could, and obviously those younger voters potentially more likely to engage with your social media, your TikToks, your Google, etc. If we could just go back a slide, actually, just wanted to thank you. So what's really fascinating about the graph there is that Hispanic respondents in that poll, you can see, felt that actually even when Trump was talking about immigration as a problem and something that the country needed to overcome, Hispanic voters didn't really actually feel he was talking about them. Even Hispanic respondents born outside of the US, i.e. immigrants, didn't feel that those comments with regards to immigration were actually focused on them, which is, fascinating, and how Trump has managed to get so many Hispanic voters on side in that respect is in many ways quite impressive. But to think that it's odd.
Yeah, it's definitely been a significant cultural change, but just to pick up on one of the things that you mentioned briefly there, the age demographics of voters is going to be particularly interesting. And one of the things that we've seen over the past 6 or so months has been an increase in housing insurance premiums due to things such as extreme weather events, and that's really made an impact on the number of houses going up for sale, and that's had a depressionary effect on US housing market, not just in places like Florida, where we've recently seen very damaging hurricanes affecting real estate, but also in places such as California, where wildfires can increase insurance premiums, etc. Now, when you look at the demographics of voters, the elderly, who are more likely to have a significant proportion of their generational wealth stored in things such as real estate, if they see their generational wealth being cut down, whether it's the fault or not of the incumbent Democratic government, they may well be unhappy. And as things continue to worsen over the coming month or so, we might see some very interesting demographic votes by age as well as by race and by gender.
For sure, and I think back to your point around the weather phenomenon as well, obviously the recent hurricane in Florida and North Carolina. North Carolina is one of the 7 swing states, and I think a lot of people there really underwhelmed at the response from the Democrats. Whole villages up in the mountains flattened by that hurricane. I think, as you can see from the map there, North Carolina is a state which could well be important to either party. But looking at the map, you can see the seven states there that are really going to decide this election. What's been interesting is when I've been looking online, a lot of people have been talking about Pennsylvania as being the key kind of linchpin, if you like, for the election. And I think that's not necessarily the case. Harris is currently looking really good in Nevada, Wisconsin, and Michigan. If, for example, Harris then took one of Georgia or North Carolina or Arizona, she actually wouldn't need Pennsylvania. And I think Pennsylvania is important, 19 electoral colleges, but North Carolina 16, Georgia 16, not too far behind. And I think it could be very close. And I think, it'll be interesting to see for sure. I think other states to keep an eye out on if you are going to be tracking the election live, as I certainly will be. Iowa and Oregon. So Oregon has been safely Democrat since the 80s, but Harris is only about 4 or 5 points ahead there, which is within the margin of error. Similarly, Iowa has been an unusual state, voted Democrat under Obama pretty safely, then switched to Republicans for Trump in 2016. So it'll be interesting to see, has Harris got a chance there as well? But for sure, states like Arizona are currently looking to flip back to Republican after being won by the Democrat at the last election, which is unusual because Arizona is a state where demographics have changed a lot of young people moving in, a lot of tech companies moving in with employees there. So Arizona is one to watch, because I think if, for example, results from there early on indicate that it's going to go Republican, it's probably not going to be a brilliant night for Harris, I would say.
Yeah.
It's interesting how demographics change in states, even in the last few years.
For sure.
Will affect the polls.
Absolutely. And then interestingly, I think what you were saying about shy Trumpers absolutely exist in the US. And I think, remember, the the popular vote doesn't necessarily indicate who will win. I think the electoral college will ultimately anticipate this. But the chap you can see there on the screen, Alan Lichtman, he's an American professor who back in 1981 paired up with a Russian geophysicist to try and come up with a way of predicting US elections, actually based on how they would typically predict earthquakes. And he came up with 13 keys or true or false propositions that essentially you ask based on what's happening, areas like the short and long-term economy, military success, whether or not the incumbent is charismatic or not. And he's called as Harris winning this election. He's only got it wrong once in 2000 when Al Gore lost in Florida. That was the only time he got it wrong, and actually kind of got it right because of the popular vote. But no, I think he's predicted Harris. He says that there's lots more on Harris's side than Trump, but that's just kind of a bit of fun, really, and it'll be interesting to see how accurate he is on the night. I think as well, like any election, it comes down to policy versus popularity as well. A lot of people will be voting for the individual versus maybe the party or for the policies. And I think particularly young voters would obviously, with that many of whom have the anti-Trump sentiment, could swing it in Harris's favour in those key swing states. Back to Pennsylvania briefly, really important state, but with big cities in it like Philadelphia, Pittsburgh, huge young populations, very ethnically diverse. It could be all that Harris needs to potentially clinch it. But yeah, really interesting. Too close to call, I think, and I think it's looking very close.
Thank you. That's fantastic analysis. And yeah, too close to call means we're going to have a really busy month.
For sure.
Definitely. And I think the impact on a number of markets is going to be quite dramatic, isn't it?
Absolutely. And the impact of markets potentially on the election. If oil price were to go high, we know gasoline hurts the American voter, high gasoline prices.
Absolutely.
Yeah. Interesting times ahead.
Sure.
Back to some charts. Bitcoin, this is range bound. You can see it's in a narrowing triangle formation. Again, to trade that, I would do nothing at these levels. I'd wait for it to break one way or other. Any particular views on cryptocurrency at the moment?
Well, I think any views that I would have would be, I think, predicated upon the US election results. If I were to wait until the 5th of November and it were to be a sea of red out there, then I might be tempted to buy some Bitcoin. But yeah, as things stand, it doesn't seem to be doing too much of interest to me.
And dollar yen, an interesting one. We've seen an aggressive rally higher in dollar yen in the last 2 weeks, again, since the payroll data. You can see the interest rate differentials again suggest it should be trading 5 or 6 big figures lower. Again, but it is trending higher at the moment. But that's something to keep an eye on, especially that will be led by the US 2-year yields. Japanese yields pricing 28 basis points of hikes over the next year. That has very little impact on dollar yen. It's all about the dollar yields, and again, wait for the break in that either way. Euro dollar, this was our chart of the week last week. To short it, again, we've had 12 consecutive up days in the dollar index. So the euro dollar is trending lower. At first target would be a 105 with a stop loss at 112 where we see a clear double top there. And again, this seems to be trending lower. Combine the US economy, which is stable, with the weakening European economy. Again, fundamentals, in my view, suggest this should go lower. Of course, we have a lot of volatility ahead, potentially with the US election.
Definitely.
So what have we got in the week ahead with data? Well, first of all, it's earnings week. So we're seeing significant earnings coming out this week. Also on Tuesday, we have the New York Fed Manufacturing Index, the UK employment data. On Wednesday, we have UK CPI. Thursday, we have the ECB policy meeting. The market's fully pricing in, expecting a 25 basis point cut. Thursday's a busy day. The US, we have retail sales, industrial production, jobless claims, and also Philly Fed manufacturing. And Friday, the week wraps up with UK retail sales, an important one, Chinese GDP.
Yeah, it'll be very interesting to see what that Chinese GDP says and the subsequent fallout from that.
So exciting week ahead, exciting month ahead into the US elections. Thank you for joining us. Good luck this week. Have a great week. Thank you very much.
Thank you.
Thank you.